What's going on, guys? Welcome to the Hustle or Stay Basic channel, the Invest or Stay Basic segment. I'm your host KG at KG the Hustler on Instagram, and today I'm gonna take a look at a comment that one of our viewers dropped a couple months ago on my Loblaw video. If you guys haven't seen that video, I said it was like the most undervalued safe Canadian stock, up 14% since I did the video, so not bad. And the comment was, very good video. Would love to see undervalued large cap American stock. So I pulled up my list, and you guys can see here, I'll pull it up, like the list of companies that I kind of monitor week to week, day to day. And it's a large list. I mean, I think there's about 134 companies that I'm interested in or watching. And there was no really undervalued company there. I mean, everything's kind of at value or, if anything, overvalued. So I started digging into my list and saying, hey, what's something that's been beat down that possibly has some opportunity to go up? And it wasn't a large cap stock, but it was a pretty interesting stock. So I'll discuss that in this video. If you enjoy this video, like it, subscribe, share with a friend. And let's get into the company I'm talking about. So the company this video is going to be on is the GEO Group, ticker symbol GEO. Has a market cap of just under $700 million. Trades for $5.74 per share, and it is down 74% over the last 5 years. So you might be like, okay, KG, what the hell are you doing, man? Are you showing me a stock that's beat down completely? I mean, well, Peter Lynch, if you guys saw my book review video on beating the streets, he says, go into areas where others are fearful. And this is definitely that area. A little bit more about the stock is it was $16 per share pre-pandemic, which means right before that March crash. I mean, so definitely took a big hit since then. It is a prison REIT, or a prison real estate investment trust. Don't worry, I'll explain what a real estate investment trust is later in this video. And they offered, keyword offered, they don't offer anymore, a massive dividend. So let's find out a little bit more about GEO Group. So I got this blurb here from Yahoo Finance, and to summarize what they do, basically they design, finance, and operate security facilities, processing centers, and community reentry centers. And they're also a leading provider in electronic monitoring, like ankle bracelets. So key thing to note here, which I realized just now, it doesn't fit in my slide here, but they have 118 facilities with 93,000 beds. So let's go figure out what an equity REIT is, and then we'll get back to what GEO Group does. So an equity REIT, R-E-I-T, a real estate investment trust, provides opportunity to investors to own property through the stock market. When you buy GEO shares, you are buying their property and the income generated from it without dealing with the tenants. So basically, when you're buying GEO, you're buying all their security facilities or prisons essentially, and all the rent that they get out of it. The big thing and major reason why people buy REITs is 90% of taxable income must be distributed to shareholders in the form of dividends. So, you're basically getting rent for the property that you're owning through the stock market. And the property here is prisons. So you'll be getting distributions, which, they recently canceled, but I'll get into that later. But you'll get distributions for owning this equity REIT. I mean, the major benefits of owning a REIT is, like I said, you don't have to deal with the crazy tenants, and an equity REIT is very liquid. You can trade it, get rid of it really quickly. Whereas, if you had this commercial building that you owned and were renting out, if you wanted to sell it, it'll be a little bit difficult. Okay, so I explained what a prison REIT is, and now let's get into that massive dividends that I was talking about in that first slide. So you'll see they're offering anywhere between 10% to 16.5% dividend yield based on the share price. So essentially, you're receiving a 10% return on dividends alone, which is like absolutely insane. I mean, unfortunately though, if you own the stock, like I showed in the first slide, you didn't really care about that dividend yield because the share price has been decreasing. So you've lost money probably at this point if you were a GEO shareholder. Okay, so no dividends, prison, REIT. Why are we like stocks down big? Why are we even looking at this, KG? I mean, what makes this interesting? So let me explain that. First point is sales and earnings. I mean, do you see anything that has changed fundamentally? Like if I took away the name prison REIT and showed you these sales and earnings numbers, would you be like, wow, yeah, that stock definitely deserves to be down, 75% or so over the last 5 years? Not so much. I mean, they've been pretty consistent. over that $2.2 billion mark in sales. So that's point number one on, hey, this looks so far so good. Well, maybe they're diluting shareholder value. Maybe they're releasing a lot more shares every year. Well, not so fast. I mean, since 2017 to now, we're actually down 3 million shares. 3 million shares. So if anything, shareholder value has gone up. So that's point number two on why this is pretty interesting. If we look at their market cap and their operating cash flow, or what I always call and everyone else calls price to cash flow ratio, it is an absolutely insanely low number of 1.58. I mean, that is incredibly low. Essentially, what that means is their cash flow from operations is equivalent to the market cap in just 2 years. So, why is this company so undervalued? This is absolutely insane. 1.58 price to cash flow ratio, which leads me to this slide. What's the catch? Why is this thing so undervalued? I'm gonna, break the bank and just buy a bunch of shares, right? Well, of course there has to be a reason why it's beat down, but is it beat down too much? Well, let's look at the reasons why it's beat down. Starting with number one, the balance sheet. It's not a like sexy, amazing mint balance sheet, but it's not horrendous either. I mean, they have enough current assets to meet the current liabilities, like almost twice over at 1.73. So that's definitely good. But like you can see, $283 million in cash, $3 billion in debt, and a lot of that debt is maturing in 2024. I mean, $1.7 billion. How are they going to pay for it? Well, that's kind of what makes it beat down. But I mean, we've seen worse balance sheets, and the stock's still soaring up in this market. So, what's the catch? The profitable company, beat up balance sheet. I think this next slide will really explain why it's extremely beat down. So Joe Biden signed an executive order to roll back the U.S. government's use of private prisons in what he called an initiative to tackle systemic racism. Wow, I can't even say that word. So like you guys know, or probably know by now, the GEO Group manages private prisons, and they manage it through an equity REIT. And when Joe Biden is saying, hey, the U.S. government needs to roll back their use of it, he's talking about ICE, BOP, and U.S. Marshals. BOP is Federal Bureau of Prisons, U.S. Marshals, and ICE is Immigration and Customs Enforcement. You've probably heard the word ICE mentioned quite a bit when Trump was in power. So if Biden is rolling back their usage of that, I mean, you can see this is a big chunk of GEO Group's revenue. It's actually 49% of their revenue. So that's not good news. Their revenue is exactly going to be, slashed in half, essentially. So what adds fuel to fire is major banks like JP Morgan and Bank of America are saying, hey, we're going to stop financing private prisons. So the GEO Group has to go somewhere else if they want to go get a loan. So what am I doing and why? And before we get into that, I kind of want to summarize what we know about GEO Group today. Number one is the GEO Group leaders are deciding whether it's going to be listed as an equity REIT or they're going to change it into a corporation. And as you know, a corporation doesn't have to give away 90% of taxable income as dividends. So they have to decide that by the end of the year. And if they decide to keep it a REIT, they have to give up that big dividend payment. So, I mean, at $5 per share, they're going to give a massive dividend payment. I mean, there's some upside there. Number two, the government can bully GEO Group, but at the end of the day, they could really use the buildings and infrastructure of these prisons in the places they are. So they could actually probably buy these prisons from GEO Group, which in turn could be used to fix up their debt issues or their balance sheet. I mean, so it's kind of still some upside there if you look at it from that perspective, because GEO will have a lot of leverage, and if anything, they could get over asking price from the government. I mean, they're spending money like crazy anyways these days, so who knows? They might just blow some money and overpay for some of GEO's assets. Number three, even at 51% sales, the numbers still look good for GEO. I mean, at 51% sales, we're probably looking at 3-4 times operating cash flow. I mean, these are still really good numbers for a company that's profitable and in a niche business where they're essentially one of the leaders in the US. Number five, the jobs numbers that were released last week didn't look that great. I mean, there's been discussions about the eviction moratorium being over, so a lot of people might get evicted, might be a lot of homeless people. Homeless people lead to more crime lead to overfilled prisons, and then the GEO Group's back in business. I mean, so there's some upside there, I believe. So now to the most important question. I mean, the reason you're watching this video. What am I doing with all of this information? Well, I still have this company marked as a tune in later. I think it's early in the game. They have important earnings coming up this Monday, May 10th. So I'm going to listen to what management says there. But I think this could be a decent cigar butt stock. If you're not unfamiliar with that term, I mean, Warren Buffett would say, you know, it's got one puff left in the cigar, so you can kind of like double up your money or 50% of your money with some low risk. But I think the risk is still a little bit high due to all of this government intervention. So I might pull the trigger if this company starts to show any bounce back potential. But at this point, I'm kind of like a wait and see. So what do you guys think? Have I gone out of my mind to get to the point that I'm starting to look at prison REITs for value? Have I reached the twilight zone when it comes to stock market valuations? Let me know what you thought about this video. Hopefully you learned something. I mean, hey, there's prison REITs out there and they seem to look undervalued at this point. If you enjoyed the video, like the video, subscribe. Really appreciate the support, and I'll see you guys later.